Today on Fear and Greed, Donald Trump says the USA will take over the Gaza Strip. New federal money for public hospitals as Canberra bans bureaucrats from using DeepSeek AI, and a boom year for the Future Fund. Plus, the local share market jumps and Alphabet's massive spending on data centres. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Thursday, the 6th of February 2025. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, Donald Trump says that the US will take over the Gaza Strip and redevelop it into a booming Middle East jobs hub, suggesting the territory could become the Riviera of the Middle East.
He just keeps giving, doesn't he, Donald Trump?
Yeah,
He's like...
Goodness me, the headlines that this man creates is quite extraordinary.
It sure is. Look, Donald Trump warned, though, for this to work, Palestinian people would need to be relocated to other countries. Unveiling the blueprint alongside Israeli Prime Minister Benjamin Netanyahu at the White House. And of course, this comes amid a very fragile ceasefire agreement between the Jewish homeland and Hamas following 16 months of war. Mr. Trump said he's prepared to use US troops to realise his vision if it proves necessary. He said there's a need to do something different in order to break the cycle of violence and deliver peace to the Middle East, arguing that the world's people could live in the small territory overlooking the Mediterranean once the project was completed, as in world's people, all people could live there. I think at least that's what he meant. Mr. Trump said Gaza should not go through a process of rebuilding and occupation by the same people that have really stood there and fought for it and lived there and died there and lived a miserable existence there. He said the policy could be paid for by neighbouring countries of great wealth and that Palestinians could be relocated to other numerous sites or simply one large site. Mr. Trump signalled his intention to send US troops if it's necessary to take control of the Gaza Strip, and clarified that he saw a long-term ownership position for America over the territory.
The sending of US troops there would be a significant step, and any kind of American ownership over the territory is another major. This is very different to everything that's been kind of pursued in the past. Can it actually be done? Can you do it?
There are certainly a lot of legal issues to do it. I mean, you can't just go and take over a land. So there's these legal and sovereignty issues. So probably not. I mean, of course, there's a bunch of people living there as well, and I don't think you can forcibly remove them. They may want to live there. The surrounding states, who Donald Trump says can take the Palestinians, well, some of those have already come out and said they don't want to take Palestinians. There's no sign that the Palestinians want to go to those states. Even Benjamin Netanyahu, who is next to Donald Trump, called it at the extreme end of a solution for the region. Now, our own Prime Minister, Anthony Albanese, said Australia, he really tried to avoid it yesterday. He said Australia would be consistent when asked whether his government would speak out against violations of international law. He kind of fell short of saying whether a US occupation of the Gaza Strip would amount to such a violation. He basically avoided the question all day. He wouldn't say whether Australia would support a US takeover of the Gaza Strip, wouldn't talk about whether we'd send troops or anything like that. I think the short answer is that Donald Trump can't do it. I'm not even sure Israel wants him to do it, but certainly an extraordinary 24 hours in geopolitics.
Oh, and it would just be... It would be a seismic shift for the Middle East, and it would essentially do away with the two-state solution, really, because the Gaza and the West Bank are the two kind of central kind of pillars of that, and essentially removing Gaza from the equation, and the two-state solution is something that the US has supported previously, the UK has supported previously, most Australia, people. Canada, Europe, everywhere. Basically has supported this. Egypt, hugely influential in the Middle East. This would be such a seismic shift for the Middle East. And I mean, it does feel as though this is just something that is going to create an awful lot of discussion over the next few days, but may not actually eventuate into anything meaningful because there are too many questions and too many kind of issues attached to it.
I think that's right. It's interesting what Donald Trump is doing to the office of the president? Because
Mm.
what you've just said then, Michael, if any other president in the US had said what was said, we'd think this is serious. Donald Trump, we think, no, it's just a posturing position.
Mm.
And I do find it interesting how, devalue is probably being unkind to Donald Trump, but certainly we think about the office of the presidency a lot different now to what we ever have before.
Yeah, and it feels, unfortunately, like a brainstorming
Yeah.
session. I think it's the kind of discussion that might take place behind doors in other administrations, and now it is happening out in the open. So
Yeah.
anyway,
Incredible.
the uncertainty continues. Then, Sean,
It does.
let's move on to markets now. Local markets. How did things go yesterday?
It was a pretty good day for the S&P ASX 200, finished up 0.5% to 8,417 points. Remember, on Monday it lost 2%. On Tuesday it went up and then fell again, ended up flat. Yesterday was up a bit. So for the week, we're still behind. The big miners led the way yesterday. Fortescue Metals Group and Rio were both up more than 2%. BHP was up 1.5%. The tech stocks and the energy companies also did well. So Woodside rose nearly 2%. Pro Medicus, Xero, REA, WiseTech, they were all up more than 1.5%. Healthcare underperformed. CSL was down more than 1%. Macquarie Bank was also off quite a bit. Just very quickly in corporate news, Emcor's share price jumped after earnings met expectations in the December quarter, and Cleanaway Waste Management's share price fell after it was forced to close its liquid waste processing facility in Western Sydney after a significant fire hit the premises.
And what's happening in international markets?
Chaos? Can I say that and just let it go?
Just a one-word summary. Can you give us a little bit more detail, Sean?
Well, oil's up. Oil's fetching about $76 a barrel. Gold's up. Great place to be when you don't know what's going on. That's trading $28.58 an ounce. The Aussie dollar has risen a bit, 62.5 US cents, but really on a long-term trend, the Aussie dollar is still very, very weak. The long-term trend is closer, somewhere between 70 and 72 cents for the Aussie dollar. At the 62 cents level, it's very cheap. And Bitcoin is back below 100,000 US dollars a unit.
Sean, after the show, you have an interview coming up today with would have to be one of the most well-known and well-respected business people in Australia. You're speaking with Nicholas Moore, who is the former boss of Macquarie and now Australia's special envoy to Southeast Asia.
All about investing in Southeast Asia for businesses, and both large and small. Southeast Asia is so close to us. I mean, such a close neighbour. It has been underdeveloped, but Nicholas Moore talks about how it is developing and the opportunities there. Some of those countries are massive. I mean, Indonesia, I think it's the 5th most populous country in the world, and it's on our doorstep. There is so much opportunity for Australia, and we talk to Nick all about that.
And it's not just about the big companies. There
Exactly.
are opportunities for smaller businesses as well, which he speaks about. So it is a great conversation for everyone to listen to. It's coming up after the show. So much more still to come, though. Sean, we're talking about the DeepSeek ban in Canberra, the future funds bumper year, an intriguing story, an interesting one out of the US Postal Service. Stick around for that one. We'll be back in a moment with the rest of the day's business news. Sean, Chinese AI chatbot DeepSeek has been banned from federal government devices after security agencies warned of an unacceptable risk to Australian government technology. They're very quick to act on this one. DeepSeek was only released late last month, only a couple of weeks ago, and it quickly became the number one downloaded free app on Apple's App Store. We've talked a lot about DeepSeek over the last week or so. The Chinese company claimed to have developed the app very quickly, very cheaply, which many saw obviously as a threat to US dominance in the space, and that caused a massive fall. What was it, about $1 trillion?
Yeah, trillion Aussie.
Yeah, in chipmaker Nvidia's market cap in just one day. The ban now means that all government bodies, except for Australia Post and the ABC, the corporate entities, have to remove DeepSeek from their devices immediately. Though, little bit of positivity, employees can keep using it on their own devices if they wish.
Yes, I heard Tony Burke, the Home Affairs Minister, talking about it, and he was saying that the government was country agnostic on this kind of decision. because the government's already banned Chinese-owned TikTok from government devices. Now we've got Chinese-owned DeepSeek. Though Mr. Burke did say country agnostic. We can have to only take him at face value.
Yeah, and I'm sure it was country agnostic when the decision was made about Huawei as well.
Exactly.
What was that, kind of a couple of years ago.
Yeah.
Staying in Canberra, Sean, more positive story, this one. The Prime Minister has announced $1.7 billion in additional funding to public hospitals next year.
Yes, he said it should help cut waiting lists, reduce waiting times in emergency rooms, and manage ramping across the states and territories. He said it matters to people. And I quote, "This decision today will help save lives and lead to better outcomes for our nation's hospitals." It's part of a new agreement between the federal, state and territory governments where the Commonwealth contribution to public hospital increases by 12%.
And Anthony Albanese also spoke to Ukrainian President Volodymyr Zelensky and raised the welfare of Australian Oscar Jenkins, who is currently a prisoner of war in Russia.
That's right. We're almost at the 3-year mark since Russia invaded Ukraine. The two spoke about Australia's ongoing support for Ukraine as well as the fate of Mr. Jenkins. Now, Australia provides military equipment and other assistance. Apparently, Mr. Zelensky expressed his gratitude for Australia's support, both material and otherwise.
How about the Future Fund, Sean? Australia's sovereign fund returned 12.2% last year, thanks to a surge in global share market.
It's a pretty good result. I mean, it's about the same as the median balanced super fund. I think it's a bit better than that. It's probably the best comparison. Global equities soared after Donald Trump's win in the poll last November. Future Fund was pretty much along for the ride. The CEO, Raphael Arndt, said the Sovereign Wealth Fund had shifted capital from its cash reserves, private equity, property holdings to top up its global shares as concerns that the US Federal Reserve interest rate settings would induce a recession abated. So it became more confident about the economy, went into the higher risk assets such as equities, and it's paid off for them. When asked about US technology stocks and the Magnificent Seven, we've been talking about them for a couple of years and probably will, just because they are such dominant players on Wall Street. Dr. Arndt said that their earnings have grown quite strongly. He said, "We don't have a strong position on that, but we do think it's wise to avoid expensive stocks." So if you read between the lines, and I'm reading between the lines, he didn't say it, it does sound like he's not a huge fan of the Magnificent Seven. The Future Fund's assets hit a record $237.9 billion at the end of December.
That's a lot of money.
Yeah, a lot.
Insightful commentary there from Michael Thompson. Sean, rescue me here. Brookfield Capital Partners has joined the bidding war for Insignia. This has been going on for a while and it just keeps on going, matching the $3.1 billion offer in the market from private equity rivals Bain Capital and CC Capital.
Don't you love it? A good old-fashioned takeover stoush.
Oh, it is. It's a Barney. It's a three-way.
It's a Barney. Brookfield's bid $4.60 a share. The difference in its bid is it allows some Insignia shareholders to stay invested in the business by accepting equity in Brookfield's unlisted vehicle if it strikes a deal, whereas Bain and CC Capital, they don't get that opportunity. Now, CC Capital's a Wall Street firm, relatively unknown in Australia. Bain, we all know about it, bought Virgin Australian off administrators. They've already upped their original $2.7 billion offers to $3.1 billion, which is what Brookfield's offering. Insignia shareholders and investors think there's more in the plate. Its share price jumped 7% yesterday. Under its boss, Scott Harley, Insignia is pushing ahead with a strategy to restore investor confidence. It hasn't had a great run, Insignia. It bought a bunch of businesses, really struggled to integrate them. For example, it bought MLC off National Australia Bank back in May 2021. It is the third largest player in the superannuation sector, so this is big time. But it really has struggled probably to realise its value. Anyway, 3 private equity groups think there is plenty of value there and they're fighting over it.
And toll road group Transurban could become a takeover target, according to investment bankers, on the back of a dearth of infrastructure plays on the ASX and a lacklustre share price for the last 5 years, Sean.
Always interesting when the financial media, particularly Fin Review, the Australian, start writing stories about a company could become a takeover play. They don't come from nowhere. Someone is fishing. It doesn't mean anything's happening, but someone is just sort of letting the idea simmer. Now, Transurban hasn't had a good few years. I mean, share price was flat last year. Over the last 5 years, it actually hasn't done much, whereas the market has. It's worth about $41 billion. So a sale would probably cost, I don't know, $55-60 billion, you would imagine. There's not that many infrastructure plays on the ASX anymore. Sydney Airports was the big one. That's gone. So for those superannuation funds that just like that regular income, Transurban suddenly looks quite attractive. Its toll roads, like Sydney WestConnex, just provide that steady returns. Mostly fares go up for toll fares, and therefore income for these toll road groups go up by up to 4%. So inflation or 4%. That tends to be the case in Transurban. Mostly it's a local monopoly, just the kind of thing that super funds like. And it's really interesting that all of a sudden we're getting stories about Transurban, being in the sights of PE.
Okay, turning to international news now, Sean. And Alphabet shares tumbled after slowing growth in the Google parent's cloud business and plans to spend $75 billion this year on building capacity for artificial intelligence products, all combined to unnerve investors a little bit.
Alphabet reported double-digit rises in the fourth quarter revenue and profits. That was driven by its core advertising business. But the future is in AI, so investors think, and they were disappointed with the outcome for its vast cloud unit. Now, Google runs data centers, posted a 30% increase, but that was disappointing. The scale of Google's AI-related spending to meet demand surprised the market, according to the FT. Alphabet chief executive Sundar Pichai said spending on data centers and servers would accelerate to $75 billion this year. That's about 50% more than last year, about a third more than Wall Street had estimated. Alphabet shares after trading dropped as much as 8%. It was on track for one of its worst days in a decade. About $200 million worth of market capitalization in that. But it's all on the back of this $75 billion in 1 year to invest in AI. Pretty phenomenal.
Yeah, staggering figures. Now, a terrible story out of Europe, Sean. At least 11 people have been killed at an adult education centre in Sweden in the country's worst ever mass shooting. This was at a school that runs classes for students over the age of 20, including Swedish classes for immigrants. They do vocational training and programs for people with intellectual disabilities.
Yes, Sweden's PM Ulf Kristersson described the attack as the worst mass shooting in Swedish history. Police believe the gunman, who was one of those killed, acted alone and had no suspected connections to terrorism. Sweden has a high level of gun ownership, largely because of hunting, and in recent years has recorded a high rate per capita of gun violence. School attacks, though, are very rare, with just 10 people killed in 7 incidents between 2010 and 2022.
And finally, Sean, I mentioned this one earlier. The US Postal Service has temporarily stopped accepting parcels from mainland China and from Hong Kong, which, as you can imagine, has thrown online shopping into absolute chaos.
Guess how many parcels from overseas, so imported parcels, the US Postal Service deals with every day?
Oh, at least 20.
Yeah.
No, I don't know. I would imagine it would be 1 million?
3 million. And at least half of them are from China.
You're kidding.
No. And so what the US Postal Service said is that there's a suspension in place until further notice. Didn't really give a reason. But it does come after Donald Trump imposed an additional 10% tariff on all goods imported to the US from China. His executive order eliminated an exemption that allowed goods worth $800 or less to enter the US without having to pay duties or certain taxes. That's extremely relevant because millions of parcels enter the US from China without actually having to pay duties or taxes because they're very small. The so-called de minimis tax loophole has been under fire in recent years, particularly as Shein and Temu sells more products to US customers. Well, with these tariffs now and the fact that de minimis no longer applies to these smaller parcels, then the US Postal Service doesn't want to deliver. Imagine the warehouses, what they must be like. Wow.
The logistical. I always think back to the start of Castaway, the movie. You've seen that, haven't you?
Yes.
And you see kind of Tom Hanks flying. Where did he fly to? To Russia, and he was doing it to see if he could beat the parcel that he had sent himself, and just the logistics of it all with FedEx and stuff. And now times that by 1 million, and you have got kind of what the US Postal Service is trying to coordinate. It's just like, wow.
I once was a correspondent in the US, and I went to Memphis and got to the Memphis airport about midnight, and watched planes coming in and out of Memphis between 12 midnight and 5 a.m.
Oh,
and at times they were every 30 seconds. They were landing or taking off because Memphis is the center. I mean, Memphis is sort of in the center of the US, and a hub for some of those big parcel service places. So once the passenger airlines have finished, it's open for freight. And it was one of the most phenomenal things I have ever seen in my life.
How did you get so lucky to have 5 hours of uninterrupted plane watching time?
It was just incredible.
That's amazing, Sean. Up next is the Fear and Greed Daily Interview. Your guest today is Nicholas Moore, former Chief Executive of Macquarie, who was with Macquarie for 30 plus years and Chief Executive for a decade of that time. He is now Australia's Special Envoy to Southeast Asia. Really interesting conversation. Don't miss it. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you very much, Sean.
Thank you, Michael.
It is Thursday, the 6th of February, 2025. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.